Bitcoin has just done it again, hitting a new all-time high just as the global crypto community prepares for one of the biggest weeks of the year. According to a recent report from Forbes, Bitcoin surged past its previous record, trading above $113,000 ahead of this year's highly anticipated crypto week. The timing couldn't be more symbolic, and market sentiment is at a boiling point. So, what's driving this new wave of bullish momentum? A major part of the surge comes from institutional confidence. Inflows into spot Bitcoin ETFs have been consistent for weeks now, with hedge funds, banks, and asset managers steadily increasing their exposure. This institutional demand is creating real pressure on supply, and that's pushing the price higher. But it's not just the money that's fueling the hype. It's also the buzz around Crypto Week 2025, one of the largest annual gatherings of blockchain developers, fintech firms, and industry leaders. With major announcements expected from companies like Coinbase, Ripple, and BlackRock, investors are buying the rumor and hoping to ride the wave of market excitement. At the same time, Bitcoin's fundamentals are strong. The recent halving has cut new coin supply in half. Meanwhile, on-chain data shows that long-term holders are not selling. That's a recipe for upward pressure. Social sentiment is also playing a role. Twitter, Reddit, and YouTube are exploding with bullish commentary, price predictions, and FOMO energy. And while that's often a red flag for corrections, right now it's only adding fuel to Bitcoin's fire. Analysts are split on what happens next. Some believe the price could continue climbing throughout Crypto Week, especially if announcements on tokenization, global partnerships, or new product launches meet expectations. Others warn that we could see a classic buy the rumor, sell the news scenario, where the market cools down once the event ends. Either way, this moment marks a significant milestone for Bitcoin. It's not just about a number on the screen, it's a reflection of how far crypto has come in terms of adoption, trust, and utility. As Crypto Week kicks off, all eyes will be on what comes next and whether Bitcoin can hold its momentum or take another leap into price discovery. We'll be watching it all unfold right here on Cryptozard News Today. XRP is back in the spotlight, and this time, it's riding a wave of momentum thanks to a major ETF development. According to a new report from Crypto News, XRP's price has surged following the explosive growth of a newly launched Ripple-based ETF, which is already closing in on a $250 million milestone in assets under management. This ETF gives institutional investors exposure to XRP without needing to hold the asset directly. It's being called a potential game changer for Ripple and the wider altcoin market. Since launch, the ETF has seen strong inflows, driven by growing demand for digital assets beyond Bitcoin and Ethereum. Investors are looking to diversify their portfolios, and XRP, with its established use case and legal clarity after the SEC battle, is rising to the top. The ETF isn't just bringing money in, it's also boosting XRP's price and visibility. After the announcement, XRP jumped over 8% in 24 hours and continues to trade at multi-month highs. But it's not just about price. This ETF represents a major institutional nod of approval for Ripple. After years of regulatory uncertainty, the company is now stepping into more traditional financial spaces. With ETF demand rising and on-chain data showing increased wallet activity, XRP's fundamentals are lining up with bullish sentiment. Analysts are already weighing in. Some say that if inflows continue at this pace, the XRP ETF could pass $500 million by the end of the year. That would make it one of the biggest altcoin-focused funds in the market and could inspire similar ETFs for other top coins. The big question now, can this momentum last? As always, the crypto market is unpredictable. But for now, XRP is showing it's still a serious contender, and institutions are finally taking notice. We'll be tracking the charts and the fund flows right here on Cryptozard News Today. This week in Washington, crypto takes center stage, and the decisions made could shape the future of digital assets in the U.S. The U.S. House of Representatives has officially launched what's being called Crypto Week, a packed lineup of hearings and legislation focused on everything from stablecoins to Bitcoin policy and crypto exchange oversight. Source: Investopedia. So, what's on the table? Two major legislative proposals are drawing the spotlight. First, a bipartisan stablecoin bill aiming to define how stablecoins like USDC and USDT are issued, which federal agencies would oversee them, and what protections must be in place for consumers. If it passes, this could open the door for mass adoption, giving regulators tools to monitor risk while boosting confidence in dollar-pegged digital currencies. Second, the Financial Innovation and Technology for the 21st Century Act, or FIT-1. This bill would clarify how digital assets are classified as securities or commodities and decide who's in charge, the SEC or the CFTC. Industry leaders have been demanding clarity for years. Without it, US companies risk falling behind as regions like Europe and Asia move forward with their own crypto frameworks. And there's a political twist. Crypto is now part of the 2025 election conversation. Former President Donald Trump and several lawmakers are publicly backing crypto innovation, calling it a national priority. On the other side, SEC Chair Gary Gensler and other regulators continue to push for tighter control, warning that without strong rules, the industry is still exposed to fraud, manipulation, and systemic risks. Markets are holding steady for now. Bitcoin and other major assets remain relatively stable, but all eyes are on Capitol Hill to see whether favorable legislation could spark the next major rally. Bottom line, this isn't just another week in DC. It's a pivotal moment for the future of crypto in America. And we'll be following every move, every hearing, and every vote right here on Cryptozard News Today. Bitcoin has just hit a major milestone, crossing the $120,000 mark for the first time in history, and a big part of that momentum is being credited to renewed political support from former US President Donald Trump. According to Sky News, Bitcoin's latest surge comes as Trump doubles down on his pro-crypto stance, calling digital assets the future of American finance during a recent campaign appearance. The announcement has injected new confidence into the market and pushed Bitcoin to levels never seen before. So, why is this such a big deal? Trump's comments arrive at a critical moment. The crypto industry has been looking for clarity and leadership when it comes to US policy. With Trump now openly backing Bitcoin and calling for crypto innovation to remain on American soil, investors are reacting fast. The result? A sharp rally in Bitcoin's price, breaking past the psychological barrier of $120,000 and sending shockwaves across both crypto and traditional markets. But it's not just about Trump. Analysts point to a perfect storm of conditions that have helped push Bitcoin higher. Ongoing institutional inflows into spot Bitcoin ETFs, a post-having supply squeeze, and global economic uncertainty are all working in Bitcoin's favor. And now, with political tailwinds behind it, the market is eyeing even bigger targets. Some analysts are already predicting $140,000 or higher by the end of Q3, especially if pro-crypto rhetoric continues in the lead-up to the US election. Beyond the price, Trump's stance is also raising important questions. What kind of crypto regulation might emerge under a second Trump administration? Will we see a more business-friendly approach to blockchain, mining, and tokenization? And how will this affect innovation across the sector? Investors are watching closely, not just the charts, but the politics. Because in 2025, it's becoming clear, crypto is no longer just a financial asset. It's a political issue, a policy debate, and a potential vote winner. As Bitcoin continues to break barriers and gain mainstream attention, all eyes are on the road to November and what it could mean for the future of crypto in America. We'll be here with full coverage and real-time updates right here on Cryptozard News Today. Could crypto finally become a core part of the average investment portfolio? According to a recent opinion piece from Bloomberg, the case for including cryptocurrencies like Bitcoin and Ethereum in major index funds is gaining serious momentum, and the timing couldn't be better. Over the past year, Bitcoin has outperformed nearly every major asset class. It's now seen as more than just a speculative bet. It's becoming a legitimate store of value and a hedge against monetary instability. Meanwhile, Ethereum is powering everything from DeFi to tokenized assets and global financial infrastructure. Despite this evolution, most mainstream index funds, like the S&P 500 or total market ETFs, still exclude crypto entirely. And that, according to Bloomberg's analysis, may no longer be smart investing. The article argues that crypto has matured enough to warrant inclusion in broad-based funds, with major institutional players like BlackRock, Fidelity, and Vanguard already managing crypto products or planning to. It's only a matter of time before crypto enters the same category as bonds, commodities, and equities. There are three big reasons why this shift is starting to make sense. First, market stability. While crypto remains volatile, its long-term trend is undeniably upward, and much of that volatility is being absorbed as institutional volume grows. Second, correlation benefits. Bitcoin and Ethereum often move independently of traditional markets, offering potential diversification for portfolios. And third, demand. Millions of investors want exposure to crypto, but they want it in a format they already understand, like index funds or retirement accounts. Of course, there are hurdles. Regulatory clarity is still a work in progress, and some advisors remain skeptical about crypto's long-term fundamentals. But that skepticism is fading fast, especially as spot Bitcoin ETFs thrive and Ethereum staking becomes institutionalized. The takeaway: we're getting closer to a world where crypto becomes part of the default investment mix, not just something traders hold in a private wallet, but something that's quietly included in your pension fund, your robo-advisor account, or your 401k. The push to put the crypto in the index funds is no longer just an idea. It's becoming a demand from both markets and investors alike. We'll be watching how Wall Street responds right here on Cryptozard News Today. The United States may be one step closer to finally having comprehensive cryptocurrency legislation. According to a report from Reuters, the U.S. House of Representatives has just cleared a key procedural hurdle for a major crypto bill, moving one of the most anticipated digital asset frameworks closer to becoming law. This procedural approval doesn't mean the bill has passed yet, but it does unlock the path for a full vote in the House. And that's a big deal, because the legislation at hand could redefine how crypto is regulated across the country. So, what's actually in the bill? The proposed legislation would give clearer definitions around digital assets, determine whether certain tokens should be classified as securities or commodities, and clarify the roles of agencies like the SEC and CFTC. It also outlines how crypto exchanges and platforms should be supervised and aims to set national standards for custody, transparency, and investor protection. If passed, this could replace the current patchwork of state-level rules with a unified federal framework. Lawmakers pushing the bill argue that the U.S. needs to modernize its financial system to keep pace with global crypto innovation. They say clear rules will not only protect investors, but also encourage responsible innovation by providing companies with the certainty they need to build and grow. Opponents, however, are urging caution. Some lawmakers and advocacy groups believe the bill may be too favorable to industry players, possibly undermining investor protections or giving crypto firms too much regulatory freedom. Still, the political momentum behind crypto is undeniable. With Crypto Week in full swing and both major U.S. political parties increasingly embracing blockchain innovation, the odds of major progress are higher than ever. The next step is a full vote in the House, which could happen very soon. If the bill passes, it would then move to the Senate, where it could face amendments or further debate. For now, the takeaway is this: the United States is closer than it's ever been to passing real, comprehensive crypto regulation. That could mean big changes for investors, exchanges, and the global digital asset market. We'll be tracking the vote and the impact right here on Cryptozard News Today. Bitcoin is soaring once again, but this time, it's leaving much of the crypto market behind. According to the Financial Times, Bitcoin's explosive rise, fueled by the success of spot ETFs, is creating a deep divide between the world's largest cryptocurrency and the rest of the digital asset space. Since the launch of spot Bitcoin ETFs earlier this year, institutional interest has surged. Massive capital inflows from asset managers like BlackRock and Fidelity have pushed Bitcoin to record highs, reaching over $120,000 recently. But while Bitcoin is thriving, other major cryptocurrencies like Ethereum, Solana, and Cardano are struggling to keep up. The article highlights a growing concern among crypto investors. Is Bitcoin becoming too dominant? While Bitcoin has always held the top spot in terms of market cap, this year's ETF-driven rally is widening the gap. Ethereum, the second largest crypto, has shown signs of growth, especially with its own ETF approval on the horizon, but it still lags far behind in terms of mainstream adoption and capital inflows. Some analysts believe this divergence is temporary. Once Ethereum and other altcoins receive their own ETF products, we could see the broader market bounce back. But others argue that Bitcoin's unique position as a digital store of value and institutional favorite may give it a long-term edge. Meanwhile, retail investors are caught in the middle. Many altcoin holders have been waiting for a broader market recovery, but instead, they're watching Bitcoin soak up most of the spotlight and liquidity. Some smaller coins have seen little movement despite the bullish headlines. The result is a more polarized crypto landscape where Bitcoin dominance has reached its highest level in years, and the rest of the market is being forced to fight for attention. Still, this rally has reignited excitement across the entire sector. Even if Bitcoin is leading for now, the momentum it's generating could spill over into altcoins, especially if institutional appetite continues to grow. For investors, this moment presents both a challenge and an opportunity. Do you ride the Bitcoin wave? Or do you bet on the rest of the market catching up? One thing is clear, Bitcoin's ETF-fueled surge has reshaped the playing field, and the gap between the top and the rest has never looked wider. We'll keep tracking the trends and the impact right here on Cryptozard News Today.